the whole Musk Twitter thing might blow up. But what it points to is that we're ripe once again to have takeover waves, this time not because of conglomerates, but because of wokeness.
This episode of Liberty Curious features Robert Wright, historian and senior research faculty at the American Institute for Economic Research. His new book, Fearless, Wilma, Soss, and America's Forgotten Investor Movement, will be available on August 30th. Robert and I discussed ESGs and how they distort the market by operating as a kind of social credit system for corporations, having them focus not on profit as a primary goal, but on so-called woke objectives. We are witnessing in real time that the countries with the highest ESG scores, like Sri Lanka, Panama, and the Netherlands, are rife with chaos, both social and economic turmoil. Circumstances rapidly change, and at the time of recording, Elon Musk was set to take over Twitter. At this time, we know that he has backpedaled on the deal, citing the massive bot problem, among other things. The exploration of Elon's quest to fix Twitter is still relevant today. So you've been writing a lot lately. You have lots of material coming out, and there was one text in particular which caught my attention, which you titled, "A Musk-Inspired Anti-ESG Takeover Wave." So what do you mean by that?
Well, Elon Musk has made a bid for Twitter, and it's gotten a lot of us thinking about what happened in the 1980s and 1990s in the United States, when there were a bunch of companies that were not doing as well as they could have been doing. And when you have an asset that's not being fully utilized, people will want to acquire it and put it to its highest valued use. So there were all of these colorful characters like Carl Icahn and the guys at KKR, who would buy these corporations with low stock prices and sometimes divide them up and sell off the pieces. And sometimes they would improve operations. But the whole idea was to make profits for themselves and for the stockholders. And they were derided as corporate raiders, and there was a famous movie starring Danny DeVito called Other People's Money that I talk about in the piece. But basically, these are the good guys. They're folks who see that there's something that could be more valuable if it took a different form or was run in a different way. So they acquire that asset and then improve it. Create value for stockholders. And it looks like that is what Musk is planning on doing with Twitter, which, as you know, has become a platform for censorship in the United States and throughout the world. They ban people for no reason or no clear reason. They throttle accounts, meaning that they use their algorithms to make sure that they don't get as many followers as they otherwise would. And that they don't get as many retweets and likes and so on and so forth. So what Twitter has done is to reduce its value as what I call in another piece, what is social media as a tavern with unusual acoustics, right, where you can block people easily without having to fight them, basically, right. or change tables or whatnot. So Twitter has for whatever reason, has reduced its own value, and Musk realizes that, and so he's going to purchase it and improve it by getting rid of some of those so-called woke features that it currently has.
Yeah, actually, one of the things from your text that stuck with me was you talked about how the people who are on the board of Twitter, they receive these lofty salaries, but they're not really, looking out for the interests of the shareholders.
That's because they're not shareholders themselves, or at least not very sizable shareholders, which is a major problem in corporate governance. So they have more incentive to listen to, sort of hysterical fringe groups than the median customer, because the hysterical fringe groups can make life difficult for them, and they don't really care what happens to Twitter's stock price because they don't own much of it. It's a very small portion of their net worth. So as long as Twitter keeps going and they keep getting their big salaries, they would rather, pay attention to the loudmouths rather than the people who want to improve the stock price of Twitter.
And so is this kind of how corporations were historically run, or is this something that's been creeping in the last few decades through things like ESG?
It's been a battle actually over centuries, where sometimes stockholders are ascendant and other times management's ascendant, and they fight back and forth basically for control. So in the 80s and 90s, managers were ascendant, or rather in the 50s, 60s, and 70s, managers were ascendant, and they built these large conglomerates, they were called, a bunch of disparate businesses all under one corporate rubric that didn't make any sense economically. So that's where the sort of Raider came along, who would take over the company and then break it up into parts. Because basically they were using valuable parts, valuable subsidiaries to subsidize the other parts of these behemoths. And the reason why the managers wanted these big corporations was for more power and for bigger salaries, because it's much easier to justify $1 million salary in a $1 billion corporation than to justify it in, a mere $100 million corporation.
So this would be when people who typically are leftists, but some conservatives too, but I think this seems to be something more with progressives and more with people who tend to identify as left, is that they have a big problem with corporate greed. Is that kind of where that comes from?
No, not at all. People like Larry the Liquidator, they were looking to make a buck for themselves, and in the process to help other stockholders. Managers didn't like it because they prefer not having, their corporations taken over and, losing their jets and their corporate charities, where some of them would ensconce their mistresses in high-paying salary and so forth, right? These executive perks. So they didn't like it, so they developed countermeasures, the most infamous of which is called a poison pill. Which Twitter actually took one. It is a way of trying to thwart a hostile takeover, basically by giving a bunch of voting rights to existing shareholders. And it didn't work in Twitter's case because Musk was willing to pay so much over the market value of Twitter, at least initially. Of course, so some of this might be rolled back as we speak, because Musk is discovering that Twitter has been overstating the number of its users.
Yeah.
And a certain president has, half of his followers are bots, it turns out. Computer programs, not real people.
Interesting.
Yeah. So that whole thing the whole Musk Twitter thing might blow up. But what it points to is that we're ripe once again to have takeover waves, this time not because of conglomerates, but because of wokeness. So it's an exaggeration that, if you go woke, you're going to go broke. Mm-hmm. But it's not an exaggeration if you go woke, you're not going to earn as much for stockholders as you would if you paid attention to your median customer rather than a fringe stakeholder.
Now, if I understand correctly, that's where the ESGs come in, right? Because they have shifted the focus from being on profits, at least, on paper, to saying, well, this is kind of like a social credit system now. You have to meet these criterias for environment, social, and governance of your company, and not just focus on profit.
Social justice, yes. So it's green and it's got the social justice in there. The governance one actually isn't so bad, except usually the way it's being defined is that corporations that place more weight on stakeholders get a higher score. And stakeholders is code for employees, customers, people in the community, whatever that means.
Right.
I like your analogy to a social credit score, because that is kind of the gist of it. It's the government, either directly through the SEC or indirectly through the bond rating agencies, want to privilege corporations that they feel are environmentally good, are helping
Socially
with social
good.
justice, socially good, and follow this stakeholder theory of the corporation rather than the stockholder theory espoused by free market economists like Milton Friedman.
So actually, I would like to talk about Milton Friedman as well, because you named this the anti-ESG Friedman Fund as a hypothetical fund.
Right.
But before we get to that, what I would like to think about here as well is something about stakeholder versus shareholder. This has been kind of a trending word, in the Newspeak lexicon. You have people talking about stakeholder capitalism, and they tout this to be this wonderful thing, which will benefit all kinds of people. And I don't think that many people really know exactly what it means. It does, however, make me think of Atlas Shrugged when she's describing this company that's run by its employees, and they have to attend all of these board meetings and they have to make all of these decisions, and the company quickly just degrades itself and people are very unhappy, and then I believe it goes bankrupt. So would you like to speak to that?
Well, I mean, it's tricky. There are employee-owned corporations. Like there's a grocery chain in the Midwest, for example, that is owned by its own employees. And of course, many corporations have ESOPs, or employee stock ownership plans, so they're at least partially owned by the by the employees. But the stakeholder theory is a different idea. It is, regardless of whether an employee owns stock or not, they should get something more than the prevailing wage for what they do.
Oh.
As should people in the community, as should people who are customers or suppliers to the corporation. And so basically it's a way of redistributing wealth away from shareholders to members of these other groups without going through the government, right? They want to directly make payments of various sorts to these other groups that happen to do some sort of business with the corporation.
So that's kind of like an idea that might be stemming from socialism or fascism or elements of those.
Oh, absolutely. Yes. It's it has a very long history. In fact, this sort of idea began in the United States as soon as the country was formed, basically in the 1790s. There were banks and other for-profit corporations that were forming, and there were people saying, well, for political reasons, it's hard to get much in taxes out of these groups. They should just share what they're doing with others. So there's this debate that goes on, and the way it's resolved is that we end up with two different types of corporations: for-profit and non-profit. So if you want to help the community meet some goal, you form a nonprofit. and then they focus on that. If you want to help people indirectly while helping yourself by earning a profit, then you form a for-profit or moneyed corporation, as they would have said in the 18th and early 19th centuries, and you help people by providing a good or service that they want to purchase, right?
Right.
But if you want to do something else, hey, that's super. And we had, and I have a book coming out called Liberty Lost, we had tens of thousands of nonprofit corporations formed in the U.S. before our Civil War.
Wow.
Yeah. And they a whole gamut of things, not just charities, but everything that tries to, or anything that tried to help society or the community in some way without earning a profit, would form as a nonprofit. Militia companies for defense, music associations, just so people could listen to music, because it's not like they had, CDs back then, or MP3s, or even cassettes or records or anything like that. Music was live. So there were these nonprofits that formed to help spread sheet music and the ability to play musical instruments and so on and so forth. There were societies, nonprofits that helped women who had difficult birthing experiences. It's difficult today, but back then, many women died.
Yeah.
But some of those who survived, couldn't take care of their children very easily because of the trauma of childbirth and so on. So charities formed to help those people out.
So these
You
were
you didn't need to get money from the bank to do that, right? Or from the local railroad company or what have you.
Right, and this is what I was thinking as well, is that this sounds like it was more voluntary.
Oh, it's completely voluntary.
Right, whereas now it's kind of like they are, putting this pressure on public companies to do this kind of thing through the ESG.
Right. So your ESG score will go up if you donate a lot of money to, certain organizations. Even if that organization is just going to turn around and use the money to buy private homes and sinecures for relatives and
Yeah.
So
the line between the nonprofit and the for-profit is being completely blurred.
With stakeholder theory, yes, absolutely.
Well, that's interesting, because you also look at a lot of nonprofits, big ones, huge ones, the biggest ones in the world, and those people at the top of those organizations are the richest people in the world. So it makes sense that line is being blurred kind of on either side.
Certainly, yeah, there are international NGOs with that are huge and have huge budgets and pay competitive wages for people who have the experience and the desire to guide such large organizations, and they do quite well for themselves. Both in terms of formal compensation, and also in terms of all the side compensation
perks
that can come. Yes.
But where does all their money come from?
Well, it depends on the nonprofit. Some of them are almost wholly funded by government these days, which blurs the line between government and the nonprofit sector for sure. Some of them just do a darn good job, and they get a lot of voluntary donations from individuals. But then there's this whole other group that gets donations primarily from corporations so that they can increase their ESG ratings and so forth.
Wow.
So the scary thing about all this is that these ESG ratings are not connected to economic reality in any way. So there are plenty of studies coming out now that show that many supposedly, great ESG case studies hurt the environment, or they're not doing anything to help women, or blacks, or Hispanics, or the poor, and or they're poorly governed. They don't necessarily score very high on surveys of employees in terms of how their employees perceive that they're being treated, and so on and so forth. So, because a lot of these, the ratings are just it's statistics to be gamed. So the companies with the high ESG scores are the ones who are best at gaming the statistics, much like American universities. The highest ranking universities are the ones who could afford to pay to hire the consultants and the staff to game the college rankings most effectively. So
Wow. So that's kind of like another social credit system.
yes.
Interesting. So, yeah, actually, one thing that I found that was funny was that Tesla was scoring not very well, even though it's environmentally friendly, it's socially friendly. There's tons of people who have great jobs there, and then the governance seems to be going well.
Well, it's not environmentally friendly, and this is, of course, the really big risk in the ESG funds, is that people have made assumptions about what's environmentally friendly and what's not, and when you start to dig into it, I mean, even Michael Moore, the big
Yes, and
lefty
and that documentary that he did, Planet of the...
humans.
There you go.
Yeah.
Yeah.
He's trying to explain to people on the left that, hey, a lot of the stuff that you think is environmentally helpful is not. It's actually hurtful. And electric vehicles like those produced by Tesla are not good for the environment on net because of those batteries and the rare earth metals that are needed to create them. And then we haven't even really started to tackle the disposal costs of those batteries as their lives start to run out and they need to be disposed of. And even if some of those problems could be solved and batteries could be made cheaper from more readily available materials and so forth, we'd still have the issue of where does the energy come from? I mean, just because you plug into the car doesn't mean that there's not a dirty coal plant someplace that's producing the electricity that's powering the vehicle.
Right. Right.
A lot of the biofuel stuff was very environmentally destructive. For example, a lot of the biofuels comes from the destruction of forests. They cut down a bunch of trees that that are more valuable as subsidized biofuel than as timber or as just remaining forest.
Wow.
And they turn it into fuel. It's it's not very efficient.
It's unsurprising to me. I mean, the whole thing is kind of like this big virtue signal, and it's pretty vacuous. Like there's not really much going on behind what they're saying that they're doing, which is environmentally friendly and socially friendly and so forth. Like quite often it ends up being the opposite. And I think that this is kind of very dangerous because regardless of that, you have these companies that are being pressured to adopt this new criteria, this ESG criteria. And so therefore, like you end up in a place where there's less profits because that's not the focus anymore. And their profits are being quashed by having to balance out all of the other things, right?
Right.
Which is not better for anybody.
That's where the Friedman fund would come in.
Okay, so can you explain that Friedman fund? Let's talk about this idea.
Well, the idea is to make a profit, of course, just like Milton Friedman said. It's like a mutual fund or a hedge fund, an investment fund where a bunch of people pool their money together. Because Elon does not have enough to buy Twitter and buy Netflix and buy Coca-Cola and so on and so forth. He can't de-wokeify and
all of them.
ESG, all of these.
And certainly now that Bitcoin has been crashing, he's got even less.
Yes.
But anyways, I digress. Go on, please.
So but we could all, especially us value investors, those who believe in the investment strategies of Benjamin Graham, and those who are willing to to not follow the Wall Street rule, which is if you see problems at a company, just sell it and stay away from it. That's not what Musk did at Twitter, right? He doubled, tripled, quadrupled down on it and bought it because he saw value there.
Yes.
So the Friedman fund would either short or sell, in other words, or profit from the decline in companies that go woke and help to drive their stock price down, to discipline them, and would buy companies that are producing valuable goods and services efficiently, even if it's something bad like an oil company or a natural gas company or what have you. And whenever they see an opportunity like Twitter, where there's a company whose earnings are down because they're being woke, or because they're doing silly things that don't really help the environment, and take them over and run them the way that they should be run.
So is this having to do with the halo effect?
The halo and horn effects help. A halo effect is when a stock is overvalued more than its intrinsic value because of who the managers are, or what they say, or how they behave, or what product the company produces. And a horn affect's the opposite. That's where the price is below the rational value, the value that somebody like Graham would put on the stock, because of who the managers are, what the managers say, what the managers do, and instead of looking at the fundamentals of the company. So a Friedman fund would short the halo effect companies and buy the horn effect companies, and that would help the financial system and the economy run more efficiently by driving prices in both directions towards their rational or efficient values.
Yeah, that makes sense to me.
While making a profit doing it.
Yeah, so can we talk about this as well? Like, fundamentally, why is making a profit beneficial for not only the people who own the company or the shareholders, but the rest of society, and that trickle effect?
Well, I have a biography coming out in August about a woman named Wilma Soss, who was a corporate gadfly in 20th century America. So she was one of these people who would show up at annual stockholder meetings and tell the directors what they were doing wrong, which was paying themselves too much and too many perks, not having enough women on the board, and so on and so forth, and basically taking money away from stockholders. And she pointed out that investing in corporations is a voluntary act. People are not it's not a charity, right? On the one hand, they do it because they expect something in return in the future. So if you can't expect people to invest their money in something that's not going to return to them a profit, right?
Yes.
Why do it otherwise?
Yes.
And so essentially what the government's trying to do with the ESG system is drive investors into buying the shares of corporations that the government likes, and away from corporations that the government doesn't like. But as long as there's still a free market in stocks and bonds and other financial instruments, it's going to be very difficult for them to actually affect anything lasting. That they could do a very good job of screwing up the economy, like they did in the 2000s when the government drove so much investment into housing and into mortgages. They could certainly mess things up, but they can't make things better. Things are best when, not perfect, but best when people decide for themselves where their investment should go. And they'll sit down, they'll make rational decisions about which ones are on the security market line that provide adequate return for the risk being assumed, and they'll eschew the others.
So also, I'd just like to touch back on you spoke about fossil fuels, and divesting from fossil fuels seems to be, what the governments are looking at. Can you speak to that a little bit in terms of ESG?
Yeah, well, they don't feel as though they can just outright ban it. So they're shadow banning it, so to speak, by not giving leases so that oil and other fossil fuels can be extracted from federally owned lands. And they're trying to drive investors away from, your oil giants and your other fossil fuel driven
Right.
industries, and they want to drive investment into things like solar panels and windmills. Even though those, especially the windmills, have been shown to have serious negative environmental effects.
Yeah.
Besides just killing birds and being eyesores
Yes.
and the noise pollution, there's also the issue of those blades wearing out. And now, I mean, the wind industry has been big enough in the United States for long enough that some of the first ones in are wearing out. They have to be replaced.
Wow.
And nobody knows what to do with the old blades.
Yeah.
So they're just burying them.
Yeah.
Yeah,
That's
and you have municipalities that are worried about plastic cups.
right.
You know how big these blades are? They're like longer than 18-wheeler trucks. They're enormous.
Have
And
you?
there's millions of them at this point, and they're going to wear out.
Yeah. No. I mean, it's really crazy. I mean, none of it is really rational if you look at it through that lens. But I think a way of looking at it and figuring out the rationale behind it. I'm wondering here, like, if we actually try and find a rational reason why governments would want to divest from fossil fuels and want to go more woke and do these kinds of things, it would be that maybe there's just a lot of money to be made in carbon markets.
That's possible, yeah. It's also that they're engaged in insider dealings. We know that that's a huge issue in Congress, and that there were very large subsidies given to companies like Solyndra that ended up going bankrupt, but that people made millions of dollars off from. We know that some people in Congress, like Nancy Pelosi, are active
Yes.
stock traders, and they
Yes.
know what laws are going to pass and which aren't, and they trade accordingly.
Yes.
So yeah, it's a classic, sort of public choice problem in economics, that you have leaders who are making decisions that are in their best interest rather than the best interest of society. And some of them just seem power hungry. I don't know if you've heard, but we had a Ministry of Truth for several weeks here in the United States.
did.
Yeah, have you heard that it was shuttered essentially?
Today, I believe, yeah.
Yes, yeah, which is good news. But why was that thing started in the first place? I mean, what? There was no apparent profit to be made off from that, right? Because it was a government bureaucracy within a larger bureaucracy sort of thing. They just seemed to think that they could get away with it. So, that makes me think that at least some of our leaders are just power happy or power drunk or whatever you call it.
Yeah.
That they think they can do whatever they want.
Yeah.
But apparently not everything, not yet anyway.
Yeah, you still have some good checks and balances, and the United States has the most robust system for that, I believe, in the world.
Still, yeah, though it's eroded. But relatively speaking, and of course, a year ago I would have said Canada as well, but we all know what happened in February. And
All right, so I just want to pull this up from the text that you have written, which I will guide our viewers to go to at AIER.org, because it's a fantastic text. You have some books coming out, and you're writing prolifically. So I encourage people to follow Robert Wright at AIER. And in the meanwhile, here is the quote that I thought basically sums up the whole thing. When executives and board members earn big salaries but own little stock, they have strong incentives to downplay the importance of share prices while catering to tiny but vociferous and even vicious progressive cabals. If incentives cannot be better aligned between management and stockholders from within, then somebody from the outside, like Larry the Liquidator, Musk the Magician, or Friedman funds, must step in so that the economy doesn't suffer the large costs associated with underutilized assets.
Gosh, I wish I could talk like that.
Well, listen, I wish I could write like that. That was very well said. So there we go. We have a great sharing here.
Yes, thank you.
Yeah. So is there anything else that you'd like to add to that before we wrap up this episode of Liberty Curious?
No, I don't think so. I think we covered all the main points and then some.
Okay, well, that's great. So I hope that you'll be on again soon to discuss some of your new writings, as well as your books will be coming out as well.
Oh, I sure hope so.
Great. Thanks so much, Robert.
Thank you. Bye-bye.
Bye-bye.